Good morning, all. CamelbackTrading.org coming to you this Tuesday morning, March 25th. We're looking at window traders market profile of the ES and NQ. So I left early yesterday. So let's recap real quick since there was no video last night. There won't be one again tonight. I apologize, but going forward, I should be here full time. And once again, it's very rare I miss time like this. So first off, let's go back to what was happening, right? We were in a balance. We slightly stretched it to the upside. It failed. We came down and tested the bottom of the balance. Same with NQ. Okay? So, educated traders will say, after bouncing back and forth between balance, we finally decided to come out of balance to the upside. Uneducated traders will blame every kind of headline and news event that's out there. Okay? The market decided finally to make a directional move outside of balance. They did it in grand fashion yesterday, with not only a daily gap, but a weekly gap. So we have two gaps from yesterday in both ES and in NQ, weekly and a daily that have to be dealt with. Then we go out with a very nice price probe or price spike at the end of the day. Now we spent the majority of the overnight in the meat of our profile from yesterday, right? But now, as the pre-market is going along, we're still 80 minutes prior to the opening, look where we're trading. We are trading above the base of the price spike. Remember, that will be the most positive outcome. And by the way, speaking of that, don't forget, we had a price spike on Friday, right? And what happened? Talk about a positive response, we gapped open big time yesterday. So that's 2 days in a row we went out with price probes or price spikes late in the day. Yesterday's was accepted. Right now, we'll see if it gets accepted come 9:30. Okay, Bears are not going to defend these highs. All right, righty, pretty much the same thing. Okay, they went out with a price spike and they're holding. They don't have a weekly gap. They didn't have a weekly gap to start, but they do have a daily gap that's still holding. I like to start referring to these levels as hump levels, right? Camelback trading hump levels, or the big level that I think needs to be defended. Right now, there isn't one for the Bears, okay? The Bulls have gained control. The next real hump level for the Bears will be up if we get into the single prints from March 3rd and or a monthly high. For the Bulls, however, their hump level for today, early, is quite simple. 58.19 a quarter. That's the base of the price probe, right? And the acceptance below that, then you have to worry about getting inside of value. ES was only 8 wide yesterday, not 9. And then they could trade down to the pullback. We'll see. Same with NQ, although they were 11 wide. So if their hump level, okay, which is L's high of 392. Those are important levels for me. If they get rejected or they don't hold, then there's a chance to trade all of M's range. We see that a lot. And then a possibility of getting pulled back into value. So the Bulls basically controlled everything yesterday on our checklist sheet. Well, right now, early this morning, they're trying to control things, at least with value, to start again. And possibly, well, again, it's very early, but possibly a gap higher. But value would be the real important thing to start. Again, we talk about front-running overnight highs. We have a lot of time to go, so it'll depend where we are. That's why I strongly urge you to join a trading room that breaks down both sides of the market for bull and bear. Okay, we don't tell you, oh, it's easy to make $22,000 in 6 minutes. Okay, learn to trade. Don't be a carnival barker that they all are out there. Learn to trade. So come check us out. If we do get the overnight high sooner rather than later, it will definitely make the ebb and flow long a nice trade, especially if we stay above 58.19 a quarter and 392 our hump levels. Okay? Keep that in mind. Remember, we still have a market in the longer time frame, which is the monthly, that's still short. The weekly just turned up yesterday, so there are still shorts covering. That's why you had an underlying bid yesterday. This was a beautiful afternoon pullback low, which I would have eaten up yesterday if I had been here. Anyway, thank you. No, what am I saying? I want to show you the charts. I want to just show you the S&P chart real quick. So, let's see what we got. Remember, Monday will be the last day of the quarter. Keep that in mind. Now, the monthly is still down, but it's a hell of a nice push off the lows, right? Right now, we're $24, $25 off the lows. That's nice, but it's still down. The weekly, however, has turned up. We came out of a 2-week balance to the upside. And the daily is also up. It's also the first day we closed above the 200-day moving average, which means nothing to me for one day. But I have been beating on this drum for a while now. Okay, one day doesn't make a market. But if we do start getting acceptance above that 200-day moving average, again, there's a lot of money on the sidelines. And if longer-term money, meaning the BlackRocks, the pension funds, etc., think a low could be in for a while, you might see them coming in to fuel this rally even higher. Thank you so much for liking and subscribing to this channel. Good luck trading today, and we'll speak prior to the opening tomorrow.